Tesla taking a dip, Nvidia kind of just hanging in there, and now everyone's whispering about China throwing a wrench into everything. Anyone else feeling like we're playing market roulette out here?
It's wild out there, that's for sure. And yeah, that uncertainty vibe is real. Take that ADP jobs report, the one that just dropped. It said we tacked on 143,000 new jobs last month. So more jobs, that's got to be good, right? Stronger economy, the whole deal.
Sounds like a win.
You'd think so. But here's the thing. The market didn't love it. Instead of going up like you'd expect, it kind of freaked out a little. It all comes back to those interest rates, which, by the way, are going to be haunting every single thing we talk about today.
Okay, so interest rates, the puppet master behind the scenes we never actually see. Got it. But before we spiral into an interest rate black hole, let's hit Tesla. Their delivery numbers came out and our analyst did a deep dive.
I saw that. Over 462,000 vehicles delivered, right?
Yeah. So they're getting closer to actually selling everything they make, which is good. Right?
Definitely a step in the right direction.
Not a blowout quarter, but hey, not bad either. What I found interesting was all the technical analysis stuff, especially around those key price points. Remember those? Yeah. 235 and 266.
Yeah, that's the short game though, isn't it? For the folks who watch every tick, every little fluctuation, our analysts seem to think there was still some room to play there if you're into that kind of thing.
High risk, high reward. Some people live for that. But zooming out a bit, there's bigger stuff at play with Tesla, right? Their big event is coming up, October 10th. Who even knows what they've got up their sleeve?
Right. Could be huge. New battery tech. Who knows?
Game changer.
Yeah.
But then there's that other thing looming over everything, the whole EV market in general.
Which is where our second analyst get a little more, shall we say, realistic.
Downright gloomy, some might say. They were not sold on Tesla hitting those yearly targets they'd set. Something about EV costs being a turnoff for buyers right now.
And that's the thing, right? It's not just Tesla. Those rising costs, they're hitting the entire EV market. People are starting to do the math, and that shiny new EV isn't looking as affordable, especially with everything else going on.
Yeah, tough to justify when your grocery bill is giving you a panic attack every week.
Exactly. Our second analyst actually suggested maybe missing those targets wouldn't be the worst thing for Tesla. Might force them to adjust their prices, be a bit more competitive,
Interesting. A blessing in disguise. Okay, I want to switch gears for a sec because we got to talk about Nvidia. What's the deal there? Everyone seems to be in wait-and-see mode.
Well, Nvidia, they're a different beast altogether, aren't they? The poster child for this whole AI explosion. Our first analyst actually thinks Q4 is going to be massive for them, especially once they start showing off those new products they're cooking up.
I'm picturing some top-secret AI chips that'll make our phones feel like dinosaurs.
Basically. They were hinting at a buy-the-dip kind of strategy, but only if it dips down to that 94 to 97 range. Remember that.
Okay, so maybe set those price alerts now. But again, sounds like a long game, not a get-rich-quick scheme.
For sure. And just like with Tesla, there are these bigger forces at play. That whole AI hype bubble could get even bigger, or it could burst.
It's like trying to time the tide. Speaking of tides, things got real interesting when our second analyst went on that whole market sentiment rant, especially about China. They did not seem thrilled with all the instability, at all.
No, they did not. They're worried. And they think even good news, like those job numbers we talked about, could backfire right now, especially with the Fed about to make their move.
The Fed, always the elephant in the room, right?
Yeah.
But here's where it gets really wild. Our second analyst is actually betting against the grain here, going against all that China hype.
Yeah. They said it's misplaced, all that enthusiasm. Think things are going to take a turn.
Whoa. Okay, that's a bold move. Got to have a good reason for thinking that way.
They do. They're watching those economic data points coming out of China on October 18th like a hawk. Stuff like manufacturing, consumer spending, the nitty-gritty that tells you how the economy is really doing. They're also keeping an eye on those company earnings reports coming out after October 21st, seeing how businesses are actually performing over there.
Okay, so mark your calendars, folks. October 18th and beyond, things could get spicy. But if this analyst is so down on China, is it time to hit the panic button? Should I be converting all my money to, I don't know, canned goods and bottled water?
Whoa, hold your horses. Let's not build that bunker just yet. It's not quite time to go full doomsday prepper. But I get it. That China situation has got people spooked. Actually, this whole thing reminds me of something you were saying earlier about your friend who was thinking about buying an EV.
Well,
did they ever factor in, the whole China angle into their decision-making? I'm just curious.
that's such a good point, right? It's so easy to get caught up in what's right in front of you. But those global things, they really do trickle down, even to our own personal choices.
Yeah.
To be honest, I didn't really get into specifics with my friend about all that. I think at this point, they're mainly hung up on the immediate stuff,
Yeah.
the sticker price, insurance, the whole nine yards.
Oh, totally. That's the stuff you see right off the bat.
Right, exactly.
But as we're kind of seeing with Tesla, the EV market, it's still a bit of a moving target. What seems like a steal today might not be so much in a year or two, especially if China throws a wrench in the works.
Right, like if their growth takes a nosedive and suddenly the whole supply chain's a mess.
Exactly. And this actually ties back to something both of our analysts seem kind of hung up on. Those easy money days, they're donezo. Remember when everything in the market seemed like it only went up?
Ah, the good old days, when you could pick a stock by throwing a dart at the Wall Street Journal and it'd make you a millionaire.
Right. But those days, they never last forever, do they?
Sadly, no.
And frankly, things were bound to correct themselves at some point. What we're seeing now, it's like a return to the fundamentals, right? It's not enough to just chase the hype train anymore. You got to actually understand what you're putting your money into, why you're doing it, and most importantly, what could go wrong.
So, no more blindly following the herd. Got it. Knowledge is power.
100%. It's time to be picky about which bandwagon we jump on.
I love that.
And speaking of bandwagons, can we circle back to the China situation for a sec? You mentioned your friend was iffy about EV costs, right?
Totally.
Well, imagine if demand in China just dries up, which is, what our second analyst is predicting.
That would be a whole different ballgame, wouldn't it?
Right.
Especially for a company like Tesla, with all their eggs in the China basket.
Oh, absolutely. And it wouldn't just be Tesla feeling the heat. If China slows down, the whole global market's going to feel it. Remember those economic data points we talked about, the ones coming out on October 18th?
How could I forget? I've got those dates circled in red on my calendar.
Those are going to be crucial for figuring out what's really going on in China.
It feels like we need a crystal ball to see how this all plays out. But since we don't have any mystical powers on hand today, what are some concrete things our listeners can take away from all this?
Right. Like, how do we actually make sense of all this craziness?
Yeah, it's like we're trying to put together a puzzle,
Yeah.
but half the pieces are missing, and the ones we do have keep changing color or something. So what I'm hearing you say, and tell me if I'm off base here, is that more than ever, we just got to stay informed, like really informed.
100%. I mean, we can't control what the market does, obviously, but we can control how much we understand about it, right?
Yeah.
Especially when things are this up in the air. Knowledge really is power. And part of that is being flexible too, right? Not getting stuck in one way of thinking like, oh, it's all going to crash or we're going to the moon. You got to be open to changing your mind as you learn new stuff.
So stay agile, stay informed. Something else that really stood out to me was all that talk about risk management. Both analysts were really hammering that home. It wasn't even just about picking the right investments. It was about protecting yourself from getting burned, especially with all this China stuff going on.
Exactly. Like setting those stop loss orders so you don't lose your shirt, being super careful with leverage. Yeah, it's like the name of the game right now is definitely don't get greedy.
Right. Play it smart. And it goes back to what you were saying about those easy money days being over. Like in this kind of market, it's not just about how much you could win, it's how much you could afford to lose. Because, and let's be real, the market can go haywire sometimes. Like it doesn't always make sense.
Oh, tell me about it. Sometimes it feels like it's running on pure vibes and nothing else.
Yeah.
But that's why we got to stay informed, right?
Exactly. Okay, so we've covered a ton of ground here. Tesla, Nvidia, China, interest rates, the whole shebang. But as we wrap up here, I got to ask you, and this is a big one. Let's say our analyst is right. That whole China thing blows up, doesn't pan out the way everyone's hoping. What does that even mean for us over here?
Yeah.
Like for the U.S. markets, and especially for companies like Tesla that are so tied to China?
Man, that is the million-dollar question, isn't it? And there's no easy answer. It's like everything's connected, right? You tug on one thread over there, who knows what unravels over here. If China's economy slows down, it could be anything from supply chains getting messed up to people just not buying as much stuff. And then on top of that, there's all the political stuff, which is always a wild card.
Right. So many moving pieces. It's
Oh, yeah.
impossible to say for sure. But I guess what we can say is be aware of those risks. Stay informed.
Couldn't have said it better myself. The more you know, the better prepared you'll be, no matter what curveballs get thrown our way.
Words to live by. Well, a huge thank you to our expert for breaking this all down for us. You're a rock star. And to you, our listeners, thanks for sticking with us on this deep dive. Hope you got a lot out of it. Until next time, stay curious, stay informed, and remember, knowledge is power.